Good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Today I'm joined with David Grandy all about trends, and we want to talk market stock talk for April 4th, 2014. I want to remind everybody that everything that we talk about today is for training purposes only. We are making no recommendations on what to buy, what to sell, and then that if anything you do see or if you have a strategy you like, please paper trade that first before you risk any personal capital. How are you doing today, Dave?
I'm doing good. It's a crazy day, but I'm doing good.
Awesome. Did you like the market the way it was kind of like a meat grinder this week?
It was a roller coaster week, that's for sure.
Yeah, it was, and I know that I visited your website, and I really love the website, especially where the folks send you emails, and I know you like getting emails from people who are saying, "Hey, what you're providing us is really working for us."
Mm-hmm.
And about 50 minutes before the end of market day, I got this email from a guy that I just, it really touched my heart, because it kind of answers the question for both David and I believe, of why we do what we do. And this is a young man I've been working with for a little bit over a year on his trading, and he was going to be attending a meeting that we host on Saturday. But what I really loved was where he says, positive note, I was up 65% for 2014. I withdrew all my money, paid off my college bills for my master's degree. And so he just says, thanks for all your help. And that really warms my heart when I get something like that. And so, and I know for David, it's the same. You love it when people who subscribe to your newsletter let you know that, hey, way to go, you've done a great job for us. Is that right?
Absolutely. That's what we do this for, is to help people be successful in life. And we talk a lot about, it's one thing to just trade, but it's another thing and more effective to trade with a purpose. What are you going to do with the proceeds from your trading? You're going to use it to pay off bills. You're going to use it to travel like you do, Dennis. I mean, you got to have a purpose behind it, which makes it more effective and more personal.
Yeah.
So yeah, we get letters from members all the time that are elated, and they tell us what they're doing with the funds, and it's a thing that keeps us going for sure.
So, and one thing I like about all about trends, your website, and some of the processes, systems that you use, and of course the Active Trend Trading System, is that one, we both have the elements of what all great and good trading systems have, and that basically we identify what to trade, where to enter, where to exit, and to some extent what strategy to use. And those are the elements that make up a great trading system. And it takes a while to develop that, and so fortunately I know that having a system that works consistently is very important for both of us. So, Dave, let's take a look at this crazy market, okay?
Let's do it.
Okay, folks. Today, what I've put up is a excuse me, I just had a complete gas to the brain. Is a chart of the NASDAQ, because the NASDAQ really got whacked today. I mean, at the close, it was down over 2.5% for the day, and as we can see, as we talked about the NASDAQ and all the indices last week, we were over here last week, right here, and we talked about, well, we could get a bounce here. And sure enough, we did get a bounce up there Monday, Tuesday, Wednesday, and then all of a sudden we got this huge turnover where we started dropping down out of the sky, and today was a significant sell-off. Today was one of those days where you just go, ouch. And if you are a trader to the long side, today I hope you had your stops very, very tight. So the NASDAQ, what I've got here on the left-hand side is a daily chart, and on the right side a weekly chart. And the NASDAQ has started showing its weakness back about 4 weeks ago as we start getting what is close to a bearish engulfing pattern, and then continue to tick down. We start breaking through some, this is the 8-period moving average on the weekly, which approximates the 50-day moving average on a daily chart, and continue to sell off. We get this big, a pretty significant move up, but where does it move up to? Right to its past weekly highs. Past weekly high, and then stops dead in the water. The S&P, on the other hand, was a little bit more tame, it appeared to be, because it did press up, hit a new high for this trading, it's a new high for the year. But as we look at it, today's sell-off for the NASDAQ was down 1.2%. So those of you who are IBD followers will find out whether or not the market, the uptrend went back under pressure, or because of the action of the NASDAQ was actually is graded back to being that the market is in correction again. We will see. It too has bounced back down. It is sitting, this is S&P, it's sitting right at the 20-day moving average. It is still a long way from the 50, so the S&P is acting much stronger than the NASDAQ or the Russell. The Russell got whacked today a little bit over 2.3%. And it's been kind of a classic, it is a classic technical analysis failure at this point, where you get this one move down, move back up to a lower high, lower low, and then a bounce back up to another lower high. And we still haven't undercut this level here, but isn't it interesting? The Russell came to rest right on this uptrending channel and the 100-day moving average. What will next week bring? We don't know. But I will point out here, if I may, I want to point out one thing, and that's that if we break through this level here, or this level, which is we could, and we get a close below the 100-day, it increases the probability that we will revisit the 200-day moving average. And if someone were to just draw in a real quick trend line from here, I got a new toy. It's a drawing tool that goes into a straight line after I draw it, and I like that. And you've got this, sometimes it does. We've got this line down here, and it may, if it just continues to operate with that and push on down, we could see a convergence of the 200-day moving average and the price action somewhere about the 1120 or 1115 level on the Russell. So as we see, pretty significant sell-off today. What's the plan for next week? I'm going to wait and see. I am basically all in cash. I did do a couple of trades with TNA to the downside, MasterCard last week to the downside. But right now I'm just standing by because it's really, I'm in no man's land right now with no trade to make. So with that, David, tell us about all the things we can go long on next week. And I'm going to switch over and make you the presenter, buddy. Okay, you got it.
Okay. Yeah, you kind of took the words out of my mouth a little bit. I mean, right now, cash is king. I'm just go through the highlights here. The NASDAQ, after looking really good earlier in the week, got back to its old tricks yesterday and followed through with vengeance today. So it's back to leaving the market down. And as I'll show in a minute, we had our first consecutive 2-week close below the 50-day moving average. For those of you that are more long-term investors, that's a decent change in trend. We've always had Whenever we had a week down, we were always pop back above the 50-day the next week. Not so this week. Orderly pullbacks above support, we had a few of those. Actually had 6 or 7 of them that were really looking really nice last week, but those are no more. And short sales patterns, we've got some, but they're still in the process of setting up, and those that have completed, they're really sloppy. So like Dennis said, cash is king right now. There's just, the fastest way or the best way to lose money in the stock market is to trade for trading's sake. Got to do the trade. Right now, it's a great time to just sit back, relax, let the patterns come to you. The best time to re-enter the market is when there's an abundance of really tight quality patterns, and we're just not seeing that right now on either side of the market. So let me just go through. I was talking about the consecutive weeks here. If you'll notice, this entire run here, we came down, popped back up, came down, popped back up, came down, popped back up. This time we came down and we stayed down. So, what that means long term, we don't know, but it's definitely a change in trend worth noting. We talked last week about pullback off highs patterns, the only pattern you need to know in an uptrending market. We're looking for stocks in confirmed uptrends above the 50-day moving average, low orderly volume pullbacks. We had some of those. Zulily had a nice setup as of last week, and it triggered. Made a nice move on Monday, but straight down ever since. So not really the best pattern we're looking for now. Under Armour, same thing, nice tight pattern, well above support, and today got blown up. So not a whole lot of stuff going on the long side right now, and that's, there's times where it's time to be long, there's times where it's time to be short, and there's times where it's time to be cash, and right now cash is the winner. Downtrends, so if you want to go short the market, we're looking for pullback off lows. These are stocks that are exactly opposite of pullback off highs. They've already broken down, and they've pulled back off of their lows up to an area of resistance, and then they end up breaking down again. We talked last week about MasterCard. Here we have a stock that was in a confirmed uptrend, broke down, pulled back off of its lows towards resistance at the 50-day moving average, and then it broke down last week and continued this week. So why aren't we going short on the market right now? Well, because for a couple of reasons. The NASDAQ still is near support at 3 different areas. We've got a Fibonacci level, we have a lateral level, and then we have a green uptrend level. So we could easily see a little short covering rally here. So it's hard to justify going short, particularly when the NASDAQ's fallen, 150 points in 2 days. So we have to be careful about that. And the S&P is in still decent shape. It hit a new high today. And it's still above the 50-day moving average. So it's not exactly, we're not exactly getting the green line on going short. And the other big thing is we're not seeing a whole lot of short sell patterns that have completed themselves, or those that have are sloppy. Here's Priceline, really sloppy, broke down, came back to the 50-day moving average, and then broke down again today. But there's huge swings in here. It's not really that tight or orderly. Biogen never really completed the pattern. We would like to have seen it go closer to the 50-day moving average and find resistance there before we do our short sell. SOXP actually looks pretty good. It's pretty loose, but it's not as bad as the rest. Some pretty big swings here. So this one, if we can tighten up a little bit in here, is a possible short sell for us. Other than that, there's just not a whole lot out there for me to show you this time. So what do we do when we have markets like that? We just wait. Let the patterns set up. Like I said, the best time to get back in the market is when you have just a strong abundance of quality setups. We don't have that right now, so it's a time to review your past trades, build your watch list, go do something else, go take a look at some projects you've been trying to get to, or spend time with the wife and kids. I don't know. It's just a great time to rest, recharge the batteries, and you know, the beauty about the stock market is it brings you in automatically and it takes you out automatically. And for those of us that trade what we see and not think, hear, or fear, we just, you know, we get in when the market tells us to, and we get out when it tells us to, and at some point soon, the market will give us the green light to get back in either on the long side or the short side, and we look forward to that.
Hey, thanks, Dave. You know what, I love it when you talked about the aspect of that one stock that was coming up. It was wedging up towards the 50-day moving average, but didn't get there. And I don't know if that just portrays the underlying weakness that is in the actual market right now. But I know I want to show a couple of items. One is while you were talking, I went ahead and threw up a Fibonacci on the NASDAQ that points exactly where it's sitting, right at the the 61% retracement level, and actually it bounced a little bit off of that today. If that fails, we've got the uptrending channel, and but we could see a complete retracement. We talked last week. One of the things we said in kind of the closing comments, if I remember correctly, was that for the last 2+ years, all the corrections have been short and shallow, and while the bull market had been in place for 5 years, it could be running out of gas, and we're looking for something different to happen. Perhaps what we saw this week, this meat grinder, where a person could have got into on this bounce off the 100 and ridden and gotten a really nice return over a 2 or 3, 4-day period, but then immediately, if you had a longer term perspective, you were in the meat grinder and you got tossed out for a break even or a potential loss.
Yeah, I mean, last week what we were talking about was, hey, what's the problem? We've been here before, and we showed the long-term chart of the NASDAQ and the red circles where it hit the overall long-term trend line.
Yep.
Hey, we've been here before. We've still got quality setups, and then as of through Wednesday, everything was looking really great. It looked like yet another time to to buy the dips, and then obviously things turned for the worse Thursday.
And so, I kind of like trading to the downside with puts and occasionally going short. So when I see a sell-off like this, I kind of get excited, hoping that it'll purge some of the maybe a little bit of over-exuberance in the market out. One of the things I found quite interesting on the IBD 50, and I've got that list, and I download that each week. Only 4 out of the 50 were up for the day, and so it's right in line with the market. And then I also do a running list of all the stocks that have been on the IBD 50 list for the complete year. And there's approximately 108 of those right now. And the way I have this sorted, up at the top here, only I think it's 10 of the stocks of that 108 stock list were actually in positive figures today. And the one that got hit the worst was our old buddy Priceline, as you were indicating. I wanted to just highlight one chart before we move on to answering any questions, David, and that's the.
Let me add one more thing too.
Yeah.
On the IBD 50, if this is going to be a more prolonged correction, whether we go sideways or downward, the IBD 50 list is probably going to end up being one of the best short sell lists out there, because you've got a lot of names on there that are really extended, that have made big runs, and have all broken down now, or not all of them, but most of them have. And it's just a matter of time for them to complete their patterns. And if they do that, it's going to be great. And then while the correction's going on, there's going to be new names that are going to set up, and they're going to set up early stage bases, and they'll break out, and when the market gets healthy again, and you'll see those start to emerge, replacing the beaten down ones on the IBD 50.
and I agree on that wholeheartedly. And I think I discovered that, and you guys discovered it also several years ago, that those growth stocks, they go up sometimes like rocket ships, and and oftentimes when it's time for the sell-off, they fall out of the sky even faster than they went up. And that's one of the things of technical analysis. Typically, it takes about a third of the time to go down as the time it went to move up. And Harlan mentions that the last cycle's leaders become next cycle's laggards. I wanted to highlight, this is the #1 stock that was on the 50 list from last week, which is Qihoo, the technology company. And it did a really classic, and I want to just point this out to everybody really quickly. When we had a nice rebound, stochastics come out of the bottom. We got a high wave spinning top last Friday, and then it proceeds to continue up. But look at the long wicks on these candles. It showed that sellers were coming in even though there was a pressure to go up. And then Wednesday, when we get this candle right here, there was a sell point just as it broke down and engulfed the Tuesday's high. That bearish engulfing pattern foretold of what was happening next. And now we've got to close back below the 100-day moving average, which could tell us that there increases the probability that QIHU may visit the 200-day moving average before attempting another rally. So this is a pretty classic move, and I just wanted the people to see that this wedge up on slightly above average volume, and then bam, it falls back over and falls like a rock over the last 2 days and stops right where you expected, right where there was former support. So, David, you got any other charts? So I heard you correctly. You're going to take some time off next week and just go to the beach, right?
Well, it's supposed to be in the mid-80s here next week, so maybe I will do that.
Okay.
But seriously, this is a time to take a look at your past trades and what you did right, what you did wrong, and take some time to recharge the batteries. And because there's going to be a great buy or short sell opportunity coming soon, and we want to make sure we're ready for it mentally as well.
That's awesome. So let's entertain some questions and or some discussion.